investment you all placed. One of the things when I speak with live audiences, one of the things I talk about or ask a question to the audience really is, what percentage of your ERP are you actually taking advantage of? What are the what percentage of those capabilities are you really utilizing in your software? And every once in a while I'll get a flip answer like, oh, I'm using about everything they got or something like that. But I think when the more realistic and sober heads get involved, they tell me that generally most companies use 25% or less of the software capability that they have in front of them. And again, a very realistic number and a very sobering number. And then my next question to them is, and exactly what percentage did you pay for? Well, it gets a couple chuckles and a couple of people looking at their toes, shaking their head, and you get a very quick sense that you have paid for the whole enchilada, but you're really only taking little bites out of it. And I think that's something that every software user really needs to pay better attention to, is that software utilization. And the reason I bring this up in the very beginning here is I really like to see people get the most out of that software investment. For most of us, it was a large investment. It continues to be a large investment. It's not. This is like the gift that keeps on giving. I mean, you really, hating to say it, but you have fees that are associated with it, and you're constantly investing in these packages, and it is a tremendous piece of our operating expenses today. Where many years ago, it might have been the IT position might have been a shared job with somebody else. So since it is becoming such a great part of our operating expenses, we really need to pay attention to that utilization. Well, I think one of the best ways to drive the utilization is, first of all, understanding what you're capable of, but second, really understanding the data, and to drive how do I extract data. The beautiful things about these ERP systems is they are churning out numbers and data and information about your business 24/7. The big challenge that you have is to dip your net into that data stream and see if you can pull out information so that we can make some good decisions out of it. And really, that's all that reporting really is taking that data and turning it back into something readable so that we can make an effective management decision and hopefully drive net profit. And again, this is just going to be one example that we're going to be talking about, especially around the customer aspect. But this is where your software can really step up to the plate and help you make better decisions about how you run this business going forward. So let's dive right into it here. Oops, there we go. Let's see if I can. There we go. Hopefully everybody can jump on there. We're in the customer profitability screen. Well, I think the first question I want to ask you when we're looking at the customers in our business is, are they all created equal? Now, I think most of us will look at each other and smile and say, no, they're not created equal. They, some are more equal than others. But boy, that certainly isn't the message that we give our inside salespeople, our delivery drivers, if you will, any front, customer-facing individuals. No, we treat them all the same. And we have this tremendous basket of goodies that we give to the customers out there. I mean, it could be free freight. It could be this immensely knowledgeable service. It could be terms from a credit standpoint. There's all kinds of things that we give, and all of these customer service goodies that we have out there. And unfortunately, some customers are really not deserving of the whole basket of goodies. Yet we've taught the people, our front-facing folks, treat everyone the same. But we really know that they are not. So one of the questions I'd love to see you ask your team is just gather folks together, and again, I want to see customer-facing individuals as well, is ask the question, who are the top customers in your company? Just make a list. Write down the top 10 customers in the company. Generally speaking, most of the folks will be using sales volume as that that differentiator, the ranking methodology. So the biggest volume customers, the most transactions, et cetera, those are always going to be up near the top of the list. And then as we move down, but they're really going to be looking at sales volume because, again, they've been conditioned that way. That's really, sadly, what we talk about so much in these companies is revenue tends to be king in them, and that drives the thinking of who is better than others. But then I'd like you, maybe a week later, after they've digested this information, perhaps at your next little gathering, is to ask a different question. Is, give me a list of the top 10 most profitable companies with us, or most profitable customers. And now you asked a very, very different question, yet many of the people, and sadly many of the people who work with you and for you, actually believe that you asked them the exact same question, and their list might be very, very similar to what the first one was. Now, those are two very different questions, and they frankly should be two very different lists. But when we look at profitability, customer profitability, it's not the biggest and the baddest out there. It is the ones that drive net profit, and I'm all about net profit, by the way. I mean, gross revenues, okay, that's pretty. That's like that's for show. But when you really want to get down to where the rubber meets the road, we got to get down to talking about gross profit and then, of course, net profit. And so when I really want to differentiate who my best customers are, I'm going to differentiate them by net profit. And then I'm going to afford them all of the goodies that I have in customer service to the ones that actually pay the bills, that drive my net in this company. So again, who deserves these premier services? And then my belief is the ones who are paying the bill, the ones who are perpetuating the company through net profit. So here's an example of a customer profitability analysis. And really what this is it helps you rank your customers by that net profit, how much they contribute back to net profit. Now, in a distribution company, there isn't a whole lot of net profit left at the end of the day. I mean, I think we can all be honest about that. So we have to really be careful about who is contributing. And for those who contribute, we want to be able to offer that, that basket of goodies. And eventually, we just can't afford to give all of those premier services to the people who are really detractors from that net profit. So as I said, here's a customer profitability analysis. It's a fairly simple one. Again, these are all readily available fields, typically inside of most ERPs, and I'm, Sage 100, absolutely. I'm pretty sure, this is easily extractable information, but I'd like to go through it so that we all understand what these columns mean. And I will say one thing, by the way, this report actually could be referred to as the Jack Daniels or Maalox report, because I'm going to tell you right now, you better have one of those two sitting next to you the first time you run this thing. You're going to have some really scary things come up when you rank some of these. I'll tell you right now, some of your biggest, baddest customers, the ones you think are absolutely the cream of the crop, they might fall down to the bottom of this list, and it's going to be scary. You're going to have to make some really, really tough, gut-wrenching decisions. Hence the Jack Daniels or Maalox when you run this for the first time. But I do want to state, though, that this is a report, this is an analysis, I guess, of people who've been doing business with you for at least 12 months. You really do not want to try to analyze somebody who's been doing business with you less than that, because it'll skew the data. And frankly, those customers are darlings until they prove themselves otherwise. So let's keep them out of the list and out of the analysis as we go through this. As you can see, the very simple first column there is the customer name. Then you have an annual sales, or at least 12 months of sales. I mean, I might say annual a few times here, but what I'm really meaning is at least 12 full months of sales information. Cost of goods sold down to gross margin. Really the key columns here. Gross margin is probably one of your great key columns in this analysis. Then the next column is the number of orders that you processed for that customer in the last 12 months. Now, some people find that it's easier to do number of invoices. That's okay with me. Some people find that it's easier to do number of lines or order lines, so lines on a sales order, and that's fine with me too. It's whatever is easiest to extract from your software, go ahead and go with that. I use number of orders because it is very simple to explain. The next column actually tends to have a little more confusion. This is where we kind of, this is where the arguments begin. This is the COPO, or the cost of processing an order, and really sometimes it's referred to as a cost to serve. Now I've got a constant in here of 40 bucks, and what I'd like you to do is to figure out what is your cost to serve, or what is the general amount of money that it's going to cost you to process an order all the way through the system. What I mean by process an order, it's what does it cost me to take the order from the customer, pick, pack, ship, deliver, and get paid. And by the way, the get paid part is an extremely important part of this whole process. Now, there are a couple different ways to come up with this number. There is the more challenging, probably more accurate, more labor-intensive way to do it, and it's using something called activity-based costing. Activity-based costing really talks about each one of those steps. So, for example, taking the customer order, typing it into the system, then producing a pick ticket, et cetera, et cetera. Each one of those has an actual cost. You have a labor cost associated with it, a software cost. You have various costs in each one of those activities. You come up with a number for the length of time they are in each process. You apply a dollar figure to that. And then each one of those orders, you say, okay, you spent 10 minutes with Bob, 15 minutes with Joey, etc. However it works out, you come up with the end of it. When you finally get paid, you add up all of those costs, and you come up with the cost to serve. There's software out there that will help you accomplish this task, and it is probably a much more accurate way to come up with that cost to serve number. But it's also really laborious and, frankly, more information than I really need. So I'm going to give you the easy method. The easy method, the quick, dirty method, is take your annual operating expenses, and that's all of them. I'm not talking about just the ones in the order processing functions. It's take the operating costs of the company, operating expenses of the company from the P&L, and divide it by the number of orders you processed last year. Let me say that again. Annual operating expenses divided by the number of orders you processed in the last 12 months. That is going to get you down to a very rough, dirty number, and it's a pretty good number, I'll be honest with you. Is it a perfect number? Absolutely not. But it is good enough for what we are doing in this type of analysis. So you do this, and as I said, I threw out here 40 bucks. Well, 40 bucks becomes your constant. In many companies that I've done this with, it can range widely. When I did this back in probably 2002 when I was a distributor, I think our COPO was about 57 bucks, if I recall correctly. I've worked with other clients that had 75. I've had people that were up at 119, and I'm going to tell you right now, do not panic. If you run this number and yours is way away from this $40 you see here, do not panic. Your number is your number. It does not really matter as much, and I'll explain that here in a little bit. So again, come up with your cost to serve number, and this is what's going to help you rank the most profitable to the least profitable customers going down. Okay, now we have that one explained ad nauseum. Going on to the next column here, product of the number times the COPO. Really what we're saying here is take the number of orders that you processed for that particular customer, multiply it by what does it cost me to process an order, and you come up with what really was my cost to serve over the last 12 months for this customer. In the first example there, for customer XYZ, Our cost to serve was $400. Now, they gave me $2,000 to work with to serve that customer. That was the gross margin. So, gross margin minus what did it cost me to serve that customer, I wind up with something called the contribution to net profit, and that's my final column here. Hopefully everybody kind of understands the train of thought here. So in this case, customer XYZ, they contributed $1,600 to my net profit. They were a positive producer. Once you get the mechanics of this report put together, what I'd like you to do is then rank by contribution to net profit. Now, you're going to have a bunch of positive numbers here. Positive, 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 positive. Eventually, you're going to hit 0. And then you're going to start going into the negative. Now, again, one of the most scary things about this report is that you will find most of your customers, the vast majority of your customers, are probably going to be negative contributors to your net profit. In other words, it costs you money to serve these customers every time you write an order. Now, we could say that it's the old Pareto principle, 20% of them are profitable, 80% are non-profitable. In most companies I've worked with, it's not as bad as that. Most companies I've worked with, it's about 30% that are profitable and approximately 70% that are below the line. Again, scary. Not something that you really feel good about. Again, it's that whole stomach churning feeling when you see this for the first time. You kind of have to question, what am I doing for a living here when a vast majority of my customers are not profitable? Well, again, we're going to talk about how do we fix that, and maybe how do we make it a little bit more palatable. Some companies I've worked with, honestly, have gone with about a 50-50, and that's about the best I've ever seen, is about 50% of their customers are profitable and 50 are not. So, somewhere in that range between, 50-50 to 80-20, you're probably going to see yourself somewhere in that neighborhood. But again, don't panic. But it is scary. So the question I have is, should we just, wouldn't it be easiest if we just fired all the customers that were not profitable and we just stuck with the ones that were profitable? Wouldn't our life be so much better? Well, of course it would. But that's not reasonable. You cannot run a business just on the profitable companies. We do not have enough people to pay our bills. In fact, some of the non-profitable companies, the ones below that 0 mark, they contribute to overhead, and they allow us the cash flow to continue our business. So there is some purpose. But I will tell you, one of the biggest redeeming factors, the ones that's going to help them, give them a stay of execution here, is that the close to 0, the ones that are typically, I'd say the bulk of the non-profitable ones are actually, they contribute to the volume of our purchases so that we can buy more profitably from our suppliers. They allow us that volume discount out there. So again, there is some purpose to them. But I will tell you right now, not all of them have a good purpose to be here. And that's what we're going to focus on here next, is really talking about who really deserves to still play ball with us and who we've been stringing along or hanging on to for a long time. So as we walk down that ranking profile, we go down, and yes, we're getting less profitable, less profitable, less profitable. And eventually, I get to this red line here. And I call this my threshold for pain. I lose money, lose money, lose money, and all of a sudden I hit this point, and I'm like, okay, just about had it. Anybody below the red line, we are going to have a serious talking to. In fact, I'm already loading my little 6-shooter here. It's time to think about firing a few people. Now, I will tell you right now, firing customers is not the easiest, it's just not the most palatable thing, is it? It's not the natural order of things. We're not supposed to fire customers. Aren't they supposed to be darlings? They're supposed to be cultivating customers and getting new ones? Well, I will tell you right now, as your company matures, eventually you're going to have to find, there are going to be some customers that you have to ask to do business elsewhere. And that's really, how you fire a customer. Now, again, firing customers is, it's difficult at first. It's not, not the easiest task out there. Now, if we were in a live situation where I could see your pretty faces out there, I would ask you questions like, has anybody ever fired a customer? And sheepishly, a few people would raise their hand, and I would ask them how they did it. And most of them would say, well, we just raised their prices till they quit buying from us. Well, okay, that's fair. And that's probably the easiest, most benign way to do this. And I think that's a very valid method, is just keep raising prices till they quit buying from you. Fair enough. I could see that. Other people might have the more direct approach, the go pound sand, you are not allowed in my building approach, or here's a coupon to my nearest competitor with a 5% off. That's another way to get rid of a customer. I mean, lots of ways to do it, but as I said, probably the most popular is to go ahead and just raise prices. Well, there is a problem with just raising prices on somebody, because I'll tell you, even though you raise prices on these customers in the hope and intent of firing them or asking them to go elsewhere, some of them are going to stay, and they're going to continue this. So there's another piece of information that I have to add to this report. There's one more piece of data that I like to analyze when I'm, again, making decisions. How do I segregate customers by profitability? And that's how they pay. Because the vast majority of the transactions, B2B transactions in companies today, occur with some form of credit or some form of payment after the fact. And so we all have an AR, or accounts receivable, problem or opportunity, the way you want to look at it. Depends on how much of an optimist you are. But what I'd like to see you do is add this AR days column. And really what we're trying to figure out is, how good do they pay? How well do they pay you going forward? And as you can see by my little chart here, or my little illustration, is that there is a strong correlation between the people at the bottom of this group, the ones below that threshold of pain, to the people at the bottom tend to be really slow pay. It's just a very, very strong correlation. It's not going to be a perfect correlation, and there will be ones that actually have very good payment with you, and they're down there in the least profitable area for another reason. But again, strong correlation between folks who cost you a whole lot of money to do business with, and they tend to string you out as well. Good information to know, because if I just raise prices on them with the intent that I want to fire them, all I'm going to do is create a bigger AR nightmare. So if you are going to fire this group, and by the way, I do have actual, I would like you to segregate these into groups and actually call them as such. So as you can see down here, I've got this red group down here, and then there's that section at the top is the the profitable ones, and there aren't a whole lot of those. So I mean, you can call those A customers, the midsection B customers, and then the bottom section C customers. Oh, and I'm sorry, I did want to tell you about that threshold of pain. Generally speaking, I usually set my threshold of pain about 20% from the bottom. So about that bottom 20% from the ranking there, that's my C-level customer, and that's how I set it up there. The vast majority of your customers are actually probably going to be sitting in that B section there, or that middle section. And hey, if you don't like the ABC nomenclature, which I truly hate, honestly, I hear it too much, you can call them gold, silver, bronze customers. You can go with highly technical terms like cool guys, okay dudes, and scumbags. Hey, it's up to you. Whatever you want to call them to make to make it easier for you to segregate them, I'm okay with. But I do want you to differentiate them somehow. So again, when we're looking at that group down there at the bottom, let's call them the bronze customers today. If we just raise prices, we would probably put ourselves in a tough AR situation. So what I'd like to see you do is change the terms of sale. In other words, quit extending credit to these folks. Make them all COD. Now, in many cases, this is going to be a pretty good way to fire them. You're going to raise the prices, astronomically. You're going to cut off their credit. Why would they even consider doing business with you? Why would they stay? Because I'm going to tell you right now, as successful or as promising as those tactics are, you think, to get somebody out of your business, some of them are going to stay. And the reason they're going to stay is, well, they may be cut off. You might be the last person on the block who has actually had them on the books. They might have been cut off everywhere else, entirely possible. But a better answer and more probable is they actually like the way you do business. You all are experts in your field. You're good at what you do, and so they're going to stay. They recognize, yeah, I'm gonna take some of these draconian penalties, but I still like buying from you all. So again, you're not going to be successful firing all these people, but I think we have to make a very valiant attempt at asking them to go. And frankly, if they do stay under the two terms that we just talked about, it's going to be a little more profitable. You're gonna bump them up the list a bit. Generally speaking, you're not going to make a dog or a bum an A-level customer. They're not going to get up to that profitable level. It's just way too far a stretch. And I will tell you right now, these folks are good at staying near that bottom. They know how to be there. I think it's always surprising. I ask this question of people. If you were to write a letter to the very worst customer, the very lowest ranking customer on this list, if you were going to send them a letter saying, "Dear Mr. and Mrs. Customer, I did this customer profitability analysis on all the customers in our company, and we came to the conclusion that you are our very worst customer." Do you think that customer, do you think this would be brand new or shocking news to that customer? Do you think they don't know that they are one of your least profitable customers? No. Some of these folks are probably thrilled to be number one, finally. I mean, they've worked and scratched, and they have used and abused your system so long, they're thrilled to be number one. You just figured it out today. Again, Jack Daniels or Maalox. This is tough stuff. It's very tough stuff to go forward with. But anyhow, the point here is we have to change the way that we do business with, especially this bottom group here. Some of the other things that you might do to change the net profit picture on this group, maybe some of you have free delivery out there. These folks don't deserve free delivery any longer. We've got to get out of that game. Some of you probably do some non-stock ordering, and bring in specials for people. That costs you more money to do that than selling out of your stock, what's sitting in your warehouse. So again, they don't deserve this privilege. If those customers, this bottom group here, if they want to come buy something from you, they get what's on the shelf in the quantity that's sitting there, and they pay top dollar. And they get to pay cash right then. Now, it's up to you if you want to accept a credit card right there. I will tell you right now, that's 2 to 3% out of the game, but entirely up to you. Chances are a lot of them, they might go away after that. So again, think of all the things that we spend money on in that group and start peeling those away. That's really what we get from understanding the data and how it works inside the company. I will say also, one of the biggest expenses that we have on this group of customers, servicing this group of customers, is perhaps outside sales representation. Some of the most expensive people that we have in our business, and we have them hanging out with the dogs and the bums. Those are expensive. I mean, are debatable, but many people believe that the average sales call is about $200. Do I really want to spend that $200 on the C-level customer? And I'm going to tell you right now, your salespeople are calling on them today. You might think they're not, but they are. In fact, they're probably their buddies. In fact, they're having a bad day, they go hang out with these guys. So how do you get outside salespeople to quit calling on this group right here? You quit paying commission on those particular customers. You know, a lot of people ask me, about sales management, how difficult, how to manage salespeople. I say, look, it's pretty easy. You grab them by the wallet and you tell them where you want to go. Cut off the commission on the C-level customer, and you are going to change the behavior of that salesperson. Now, that's a whole lot of things that we're doing here to try to either fire these folks or at least make them a little bit less unprofitable to work with. Again, lots of different things that you can do here. Just think about any additional services that you might provide out there. This group does not qualify for them. Your resources are stretched thin. You need to make sure that you are spending time and energy with the right customers out there. Well, let's move off of this bottom group here. Let's take a look at that large swath of customers in the middle. Now, this group here, we're not trying to break out the broadsword and lop off their heads. We would like to keep them in the fold, but we'd like to, again, make them a little less unprofitable. In other words, we'd like to get them to contribute just a tad more, and as I said, make it a little more palatable to keep them on the books. Their great claim to fame, though, is they do provide us enough volume to buy in the proper discounts with our suppliers. That's really their biggest addition to our mix. But I think there's two things that I would focus on if I were going to attack this and try to improve this group here. One would be the number of orders that that they're placing. Sometimes you have customers that will come to you 2 and 3 times a day and place orders. Well, when we do that, we're creating transactional costs each time they place a new order, a new order, a new order. But not only are we creating transactional costs on our side, we're also creating transactional costs on their side. They have to generate a PO. They have to generate a payable. So again, there are soft costs on your customer side that probably they're not aware of. At least the person who's placing the orders is not aware of. If you want to combat this, generally this is not a conversation that you have salesperson to purchasing agent of your customer. It's generally a financial person to financial person or owner to owner type of discussion. And really you just talk about, hey, we're really doing business in a very transactionally expensive way. Is there anything that we can do to change this? That might be a tactic to go forward to try to reduce the number of orders. Sometimes people will impose minimum order sizes. That might reduce the number of order transactions going through. So there are a couple different tactics that you can do here. Generally speaking, this is one of the harder things to combat. Sometimes your customers just have to do business that way. It's just, unfortunately, that's just kind of the way it has to work. So again, you can try it, but if that doesn't work, then really where we need to attack is the gross margin side. And I'm a firm believer that every company that I do business with, I can find another % out of them. I look at the types of items that they're buying, and I find ways to fly under the radar, and I can find at least a % there in most of the companies I work with. So really, if you want to combat or try to improve that, what we have is this yellow group here, or the silver level, is either attack the gross margin side or the number of orders that they're placing with you each day or throughout the year. Those are really the two combating points here. But again, no real big dramatic changes there. They do provide value, and so my last thought, I just don't want to see you lop off any heads on this one. This is a slow, methodical, slow improvements on there. Nothing like what we were doing in the C-level customer there. Oops. Now let's move off of the negative side of this this train here, and let's talk about this group at the top here, the precious few, the profitable customers, the ones that contribute to our our net profit on a regular basis. This is what we're really trying to protect. And I will say protection is one of the key thoughts that we need to consider when creating policies and dealing with this customer. We need to make sure that we never lose one of these customers. Again, there's so few of them that we got to make sure they don't go and buy elsewhere. And I think when they go buy elsewhere, it's rarely for a lack of price, or for a change in price or a discount in price. It's more because of neglect. We haven't shown them how much we love and respect and care and need them. And so the activities I want to see in this A-level group up here is it's a customer nurturing type, those customer nurturing type of activities. We've got to make sure that they understand they are important to us. And those types of things can be simply having our salespeople spend more time with them rather than that C-level customer. So finding ways to drive your salespeople to spend a little extra time on solutions with this group. Because I'll tell you right now, if one of those customers decides to leave you and go to a competitor and go buy elsewhere, well, what are you probably going to do? First, you're probably going to cry about it. But then, if you actually are going to go do something about it, sadly, you go with the price book. In other words, you tend to go and drop your margins so that you can pull them back into the fold. And sadly, those margin decreases and those price reductions actually live with you a long, long time. So really what we want to do is don't let them go in the first place. You got to make sure that they know that they are loved and respected and needed in your company. And that just means spending a lot of extra time with them. Things like they call in at 4:55 at night and you make sure their order goes out, and just all those little extra things that you can do. You know their first name if they're walking into a sales counter. All the little things that help them understand how important they are to you. And I will say there's one other tactic that I really like, and this is something that we adopted in my family business when I was a distributor, is that the president of the company has the responsibility to make contact with the owner of these customers at least once a year. It's physical contact. I mean, it could be either face-to-face, or if geography doesn't work out, it could be a phone call. But the president of the company has to, go and let them know how important and ask how they're doing. In other words, we don't want to leave that relationship entirely in the hands of our outside salespeople. Make sure that the president of the company knows who they are and is on a first-name basis with the owner, or at least senior executive, somebody from the senior executive team in that customer. Again, we got to show them that we love them. Sometimes we have sports tickets, and we have, hunting trips or fishing trips, or those kind of goodies, that salespeople get to go on and take a look at. Those are the things that we should really reserve for this group right here, this A-level, these profitable customers here, rather than sprinkling them down to the C-level customer, which sadly I'll bet that's kind of what's happening right now in your company. Make sure that you reserve those extra investments, those sales retention investments, for the people up at the top of the list. Those are the folks who have deserved it. And I think we really just need to make sure that we don't let that group go. Now, beyond just customer retention and blocking out, there's some other things that we can do by understanding exactly who this top-level group is. And one of the things that I like to talk with people about is, how do we expand the business? How do we grow our sales? Well, old sales adage is that it's easier to sell deeper into an existing customer than it is to go out and get new customers. And I think all of us can agree with that, that really we have a lot of opportunities just inside the people that are currently on our books. It's scary what our customers don't know. A lot of our customers don't know that we have this breadth of product because we fail to tell them all of the things that we've invested in over the years. So what I'd like to see you do is go and do, again, a little bit of a deeper dive into this A-level group here, and just ask the question, what product categories are they currently buying from? Now, I did this with a client down in Florida, and he and I went into it, and we looked at his top-level customers, and one of the scary things, and I think if I recall correctly, he had about 35 different product categories. And what we found is that in the last year, the majority of those top-level customers only participated in about 10 categories out of a possible 35. And I'll be honest with you, I was pretty liberal about my definition of participation. If somebody had done $10 in the last year, I checked the box. They participated. Now, obviously, there was a whole lot of room for expansion there. And after he and I got done looking at each other like, we've got, this is a little scary. But what we really both saw was that there was a tremendous opportunity for category expansion in his top-level customers. And since they're already profitable, they're already paying the bills with you, they already like doing business with you, and hopefully you like doing business with them, why not focus on trying to grow categories with them? And that's really, again, it's a great sales direction that's derived from just studying data, understanding information that's readily available in your software. You just got to put it into a format that makes sense. Beyond just category expansion, take a look at advice on new products. If you really want to go out and if you're thinking about going into a new product line or maybe even a new market, ask this group of people. This becomes your focus group. This top-level customer, again, this is where you want to be getting advice from, not the ones near the bottom dwellers. You want it from those customers that are already profitable with you. Now, it's great that we've all figured out who these people are. These cool guys, okay dudes and scumbags, but really who needs to understand who these people are? Well, it's the net profit decision makers. By net profit decision makers, what I'm really referring to are salespeople, counter inside salespeople as well, and actually material handling, drivers, really everybody who has a customer interaction, accounts receivable people, everybody needs to know who the most profitable customers are and the least profitable customers, because we're going to have to treat them just a little bit differently. It's an important thing to understand who is important or who is most profitable going forward. Think about your delivery drivers. If they know who is most profitable, will they go the extra mile? Will they, will they know somebody's first name and call them by their first name? And will they be more than willing to run a 50-pound box up 3 flights of stairs or whatever it may be? Again, by disseminating this information in a meaningful way, telling them, hey, who are our most important customers, we can really improve that customer service experience overall. But again, we just can't keep it a secret at the executive level. It has to be disseminated to everyone. What is the best method of disseminating that information? Well, it's using the software. That's what everybody looks at. And so my recommendation here is we have got to tell the software who the cool guys are, who the bloodsuckers are at the bottom. One of the easiest methods that I've found, there are some software packages that actually have a field available to you in this, but I think the easiest method is to just use an asterisk or a star after the person's name in the database, either a 1, 2, or 3 star. And what that will do is show up on pick tickets. It'll show up when the order screen comes up, lots of different places that you can make good decisions from. And if a customer ever asks you, what the stars mean, again, it's a very simple answer. If there's a 1 star after their name, you can say, hey, you're cool. You're a 1 star. So the star method is one of those things that is very one of those things that makes it really, really easy for you to identify people inside the in the software package. And again, you disseminate that information, you can make great decisions going forward. Just to wrap up this this conversation here, hey, take a look at those C-level customers and find ways to either change doing business with them. Essentially, hey, fire those C-level customers. You don't need them in the market any longer. Find ways to adjust the profitability of those B-level customers, and then finally, you got to hang on to those A-level customers and utilize them to improve your business overall. Well, that's really the end of my my canned remarks, if you will, and all of that. I just want to throw in a shameless plug. I know you all have seen that I've got an inventory management seminar, and really, inventory management seminar is a misnomer for this event. This is really all about hunting cash for inside a distributorship, and I'm going to walk you through not only profitability. I'm going to walk you through lots of different asset management, just management of these organizations, and again, help you drive profitability inside the company. So at this point, Adrian, I think I'm going to turn it over to you all for the panel, and then we can do questions at the end.
Thank you, Jason. That was such a great presentation. We really appreciate you spending time with us with all your expertise. I'm going to go ahead and hand it over to Caroline Walsh and Devin Ambron. Thank you so much, you two, for sponsoring this event. Caroline's with Starship and Devin's with Scanco, as much of us know. So I'm going to go ahead and hand it over to Caroline. Caroline?
Hey, Adrian. Can you hear me okay?
Yes.
Oh, awesome. Hey, guys. Thanks for taking the time out this afternoon, and thanks to Jason as our guest speaker. That was pretty interesting information. As many of you know, Starship provides integrated shipping both for small package and LTL for Sage 100 as well as other ERPs. And with the short time that I have with you today, I really wanted to focus on Starship aspects as they relate maybe more towards Jason's discussion. So this means that I'm not really going to be going too much into the Starship shipping process, but I want to spend some more time on the actual reporting and metrics part of it. Although I do want to note that just by the mere fact of using Starship, you could positively impact your COPO. Since your shippers should be processing in a more efficient manner. So hopefully all you shippers, Starship users out there can actually, we'll see some lower numbers just from that. But as you start analyzing customer profitability, one thing that you may want to do is actually, deep dive into the shipping charges. So maybe those B-level customers that you're looking at B2C and trying to figure out if you're going to fire them or not. You might want to look at that. And one of the things that you can do from a Starship perspective is to use our dashboard to access information like that, to give you some additional insight into the shipping-specific part of your profitability. And if you're not familiar with the dashboard, it is a standard utility that's available with your Starship application. So as long as you're on one of the latest versions, you should have access to it. And it's basically just a browser-based view into your shipping data. Anybody in the company can use it. There is no licensing associated to it. And it's really primarily used for management or front office personnel, for reporting, as well as tracking and getting additional detail on the shipments. But the one report that I wanted to call out today, because I thought it really kind of went along with Jason's discussion, is this shipment charges comparison report. And basically this report is going to show you the applied freight, which is the freight charge that Starship calculated and updated on your invoice, versus the contract. And one thing about the applied freight is that Starship does also have a standard feature called freight rules that gives you the ability to define how and when the freight is updated on the invoice. And this can also include customizable fields such as Sage fields. So if you did want to define the freight charge based on the customer type, so for those B-level customers, you may want to not give them as good of a freight charge as the A-level ones. You could have Starship automatically calculate that freight so that you wouldn't have to deal with the calculation, saving your front office employees a lot of time with the calculation piece from that end. But this report that you're looking at right now is basically showing you that for instance, with American Business Futures here, these are the shipments that we processed for American Business Futures, and the applied charges, which would be the charges that we wrote back to the invoice, so we gave them free freight in one instance, and then this is what the carrier is actually charging us and what we're making on this shipment. So hopefully ABF is one of the A-level customers so that you can actually be losing a little bit on the freight as they may be more profitable in other areas. But this is the kind of report that you can deep dive into from a Starship perspective that gives you a little more insight into the freight charges. In addition to that, I mean, the dashboard gives you other metrics. So if you wanted to negotiate with the carrier to try to get better freight charges from that end, you could take a look at the various carriers that you're using and run metrics on those. You can also, quickly see your top 5 customers based on the shipping aspect. And then you could drill into those and see what shipments actually make any one of those metrics up. And so that's really all I had to show on the Starship side. I want to pass it over to Devin so he can talk about ScanCo's warehouse management solutions and go from there.
Okay, thank you very much. And so because we work primarily on the logistics side of automating Sage 100, the main question I want to answer is how ScanCo makes more information available from the Sage 100 to be able to build into metrics. And what we do, including Starship, is we're bridging gaps in the Sage 100 market to make sure that we're providing an integrated solution. So when it comes to the inventory, the inventory levels have never before been live and available on handheld devices, and the story of ScanCo since our inception was trying to make that information available to the end user. And so when the warehouse workers are tracking all of the items that are going in and out of the warehouse, that all of the information that Jason was talking about, in order for that to be relevant and make sense, we do have to make sure that operationally we have all of these other processes in place. So when orders are placed online, whether they're manual or automated, there are also other third-party solutions that provide those as well, that it's triggering a stream of processes that are getting us to processing those orders and distributing them via the handheld devices, and how ScanCo fits into that, as well as having the accurate tracking and delivery information that we need. And so as a basic, what we're doing is being concerned with the receiving and shipping processes and a few other pieces at the handheld level. And those features that we're adding in with the new ScanCo warehouse and this management is taking information, and we have a few different factors that allow for us to do analytics, which is finding out who is making these transactions on the handheld device, as well as when it was placed, so you're able to see when the bulk of your orders are being processed. And instead of having it previously where you didn't have it done on a handheld, then these orders are being entered all at the same time by someone who may be doing manual entry. And so that can cause a lot of issues when it comes to looking at and trying to see what kind of operational bottlenecks exist and other types of things. And so I have on screen here, I'm not going to go through them, but a few different of the features of the ScanCo warehouse. And of course, being able to provide a better hardware solution for these is also one of the biggest things that we've been trying to do over 2013 from this and 2014. So one of the main things that we do is obviously work on the operational effectiveness, and we have a lot of customers that we work with there. But some of the most important things is obviously making sure that the information is available so we can automate that and also have something to look at when we're looking at information. And I've got my information here on the slide, and I'm sure we'll be sending out some of that too. So with that being said, I know we're kind of short on time, so I'll hand it back over to you, Caroline. I'm sorry, Adrian.
Thank you so much, Devin and Caroline and Jason, for your great presentation. Jason, we do have a couple questions here. So do you work in ERP consulting implementations?
Not necessarily on the implementation. Well, here's what I can do. I will not claim to be the guy who sits there and does the implementation. Generally, if you're going to do an ERP, if you're going to purchase an ERP system, that is built into your purchase. What I can do for people, though, is I can sit down with them and help them with, for example, on the inventory management side, what I can do is sit down and say, okay, here's where I think that you should probably set your purchasing methods to. Here's where I think that what reports I think you should probably do on a regular basis. Those are the types of things that I can do. More from the real question is, why should you do this, or why turn this button on versus that button? That's the kind of stuff I do. As far as actually implementing software, no. But I can help you with some of the setup as to why should you set it up that way. Hopefully that answers the question.
So just to clarify, you can work hand in hand with, let's say, the business partner who works over the implementation of the ERP software. You can help with your experience, learn how to utilize the software in one way as opposed to another in favor of the business processes specifically for that company.
Right, exactly. I mean, that's really where I definitely lend my hand, is that I'm a person who was a distributor. I spent time in pretty much all facets of those companies, and so when technology is applied to it, I can kind of help with a realistic approach to utilizing it. If that makes sense. So.
Yes. So can you tell us a little bit more about your seminar tour?
Well, my seminar, it's not really a tour. It's just my seminar is it's a day-and-a-half seminar in Chicago, and what we do is walk through the pretty much all aspects of managing inventory and utilizing data inside of a distribution company. Originally this was an inventory management seminar, and that's still what I call it. But inventory management, since it's the largest asset in any distribution company, it tends to cover really most aspects of the organization, including sales and obviously material handling and accounting side as well. And so it's really a very holistic view, a whole view of distribution management. So I've had not only purchasing managers, inventory control people, but I've had the presidents of companies, CFOs, sales managers attend. Really anyone in that organization is going to walk away with something. And the way I teach basically like I speak. I'm very non-formal, not an academic up there. So there'll be a lot of group interaction. I think one of the most interesting things about it, and again, I took this class when I was a distributor back in 2002. And one of the most amazing things for me was looking around the room at all of these different companies that did not sell the same products I did, yet they had all the same problems I did. And so the interaction between participants actually is one of the more interesting aspects of this. And we have a lot of group exercises and things like that. So people are really going to get an opportunity to talk with peers, not necessarily in the same industry, but in the same distribution business.
Do you ever have the opportunity to recommend or specify ERP software? And how do you feel about that?
That is the political third rail of any consulting practice. Here's what I do when I do that. Yes, at times I will work with distributors who ask me to help them select software. I don't do as much of it anymore, I'll be honest with you, but what I do during that process is I will help somebody get down to 2 or 3, more likely 3 products that I think will work very well for the, especially around size, and maybe if they have some external functions. Some people fabricate or do some light fabrication, things like that. I will help them get down to 3 solutions that I think would work very well for them, and then that's when I have to back away, because I am not going to be software specific. I need to maintain my integrity, and so as an unbiased party. So as I said, I will get them to 3 people. I think that help them get down to 3 people that will work, could absolutely improve their business. But then it's time for me to step away and let the negotiation of which one of the 3 that they feel better with, they can go down that trail. But I am independent of any software company, and I do not take kickbacks on that.
And just one more question here. It looks like if a channel partner would want to partner with you, are you open to discussing the opportunity? Oh, sure. I'm open to discussing anything. Again, as long as I can maintain my integrity out of the thing. That's really the ultimate. There is, I cannot say that I am aligned with just one person. That really puts me in a very compromising position. But yes, I'm open to anything. Great. Well, I think that concludes our questions, and we're 3 minutes after the hour. Thank you, everybody, for sticking with us. An hour out of your day is precious. We know that, so thank you. And I would like to just hand it over to our sponsors. Once again, thank you so much, Caroline, and thank you so much, Devin, for sponsoring this event, ScanCo and Starship. So more of these types of events to come. And Jason, once again, thank you. And everybody, we just wish you have a great day. If there's anything else that the sponsors or presenter, Jason, you'd like to close with, please do. Nope, I think I'm good. Go ahead and be brave out there. Be bold.
That's right. No, thank you guys. Thanks everyone from ScanCo, and have a great week. All right, everybody, take care. Take care. Bye. Thank you, Caroline. Bye-bye.